Hey everybody, Josh Sigurdson of World Alternative Media here, and of course I'm here with author and economic analyst here at WAM, John Sneisen, and we are going to talk about the CPP, the Canadian Pension Plan. So John, take it away.
Well, our fellow Bilderberger friend Bill Murnau, he was meeting with all the heads of different provinces here in Canada, and they sat down to discuss to make a big strive for a better Canada pension policy scheme for the future of people. And of course, they're going to raise rates for us, like take that away from our current income. I think it's a huge problem that they're taking money out of my account to try to save me, because I want to save my own money. I don't want to invest in a lot of the crap that they invest in personally. I would rather put my money into way more secure assets. And it's very frustrating that the government is really like just believing that they need to take care of every single citizen because we can't take care of ourselves.
Nanny state, and it's why you kind of brought up before the Canadian Ponzi plan.
Yeah, exactly. That's exactly what it is, Josh. And we can look at some quick numbers. I'm not going to give too many details, but you can look these details up yourself if you go into the Canada Pension Plans Investment Board's webpage, and you can look these numbers up yourself. These numbers are from 2016, from March 31st. But what is interesting is 79.2% of all their assets are in paper assets, bonds or equities, which is stocks and other type of paper securities. Now, what is interesting with that is that when the stock market crash comes, what are you going to do? What are you going to do? And then we have a bond bubble coming on top of that. Please don't think that you're going to get, like, I never think that I'm going to get any of my Norwegian pension or Canadian pension. It's not going to ever happen. That money is, going to be for, whoever generation. And with the massive crash and fiat currency collapse, they only have 20.8% in real assets. They actually call it real assets, so it's pretty funny, the term, but it's in infrastructure development and of course real estate investments and so on that they put their money into. A lot of those investments are in paper real estate though. It's in REITs, a lot of times real estate investment trusts, which is basically you own shares in it and you don't really own the real estate itself. So again, like the reality, when it all comes down to it, managing a massive, huge amount of money. And I come from the point of view where I studied also the Canadian sovereign wealth fund called the Oil Fund. And they have about 80% of their money in paper, in paper as well. And actually in 2008, the only reason why they didn't just flatten out and lose a lot of money was because they pumped in oil. And when oil was at $120, well, now oil is at $50 in a barrel. And what are you going to do now when the crash comes? Yeah, and if paper money reverts to zero, as it always has historically, then how secure are those pensions? Oh, exactly. And when you look at the numbers, like right now there's $278.9 billion in the CPP. We have to start looking past beyond government solutions. We have to start looking at ourselves and taking responsibility for ourselves to invest. And they say, we need to protect the general public from being ripped off. That's why we have the securities and so on. I think we really need to financially educate ourselves way better and start to look at things more differently and do our due diligence, because people are too lazy to care about actually doing something with their money and being productive with their money. First of all, today you could just, because of the fiat currency system, you could just invest on hikes in the price. Really, when you look at a lot of things, when it comes to, for example, let's say you had 100,000 saved up and you never put any more money into that account. And let's say 10 years from now, the inflation might be so bad that 100,000 is completely worthless. So even the $278.9 billion with coming, hyperinflation and all this stuff that is looming, you're looking at this. They would have to, raise the CPP rates up through the roof in order to be able to pay any reasonable money out for people to survive on when it comes to the future. And please do not depend on like government pension whatsoever if you can. Like
no, save your own money and make it sound money. And you mentioned them trying to protect people from being ripped off, but then they put them under a system which potentially could have a monopoly on ripping them off and be like it's a coercive system. And of course there are so many people that will say, well, my union, like CPP here in Manitoba, my union says that my pension is incredibly safe. But is it safe, and what are the risks? Like, what are the main risks that people face?
The thing is too, like
a
lot of people think they're well diversified when they diversify, for example, within stocks.
Yeah,
that's not being diversified at all. You're actually like not diversified whatsoever.
Yeah,
because you're in one asset. And if you were a real investor and actually real. When it comes to diversifying your portfolio, you would actually invest in precious metals, land, real estate, businesses,
real commodities.
Yeah, real things that have real value. But of course, you can have some. You can invest in. Let's say that you and me were partners in a business, which we kind of are with World Alternative Media.
Mm-hmm.
Now, we would kind of share a little bit of revenue there, right? So, like the thing is, like, and we would have shares, but that's actually a private company, and it's not a publicly traded company that are manipulated by the today's high frequency trading algorithms and governments that are trying to prop up these markets to get us into it and then make the Wall Street guys very rich.
And of course a lot of people are worried about things happening like with the bail-in of these bail-in regimes basically just emptying their bank accounts and potentially their pension plans.
Well, don't worry about it. You have what they call the CDIC, where they're supposed to insure your money. Well, they were supposed to insure money in Cyprus as well.
Yeah,
actually,
and we actually have a bail-in legislation in Canada. One of the few countries that does.
Well, actually, there's lots of them now, Josh. And
when we started talking about it, it was quite rare.
It was very rare. Yeah. But the thing is, Josh, like what is happening right now with the world and everywhere we're going. Talking about bail-ins, I just want to we're gonna do a very interesting report in about 2 weeks or so. I'm reading a book right now that is just literally blowing the lid off of my head and making me very angry and excited, kind of, because just a level of manipulation going on through this government entity that I'm reading about. I'm not going to name the name yet, but you could kind of make up your mind already what it is.
Yeah, you don't want to be disappeared like other people.
In this book, they talk about bail-ins, and it was from 1998, sorry, when the book was written.
Yeah.
So that should tell you, like people are talking, oh, this is a new concept that the IMF made up. Well, yeah, the IMF made it up, but they made it up for many decades ago.
Yeah.
They knew that, they're going to do this as a last resort of a collapsing currency system. And of course, like when it comes to, the people running this investment fund as well, they're making a lot of money. I have old numbers. These numbers are from, I believe, 2014, but the current people at the time, and I don't know if they changed, I haven't looked into it, but I'll give you some numbers, what they were back then. It was $2.4 million to the CEO, David Dennison. Mm-hmm. And then Mark Weissman, he was senior vice president, he got $2.1 million. And then Donald Raymond Sr., he's a senior vice president as well, he got $1.3 million. And then Graham Eady, which is also a senior vice president, he got $1.1 million. So these bankers are getting a lot of money, to, of course, invest our money, which is great. I would rather, try to protect myself by learning things myself. There's very few people you could really trust with your money, and there's always personal interest when it comes to investing. A lot of times when it comes to mutual funds, for example, a lot of financial advisor would put you in what's called a back-end loaded fund because they get paid way more commission on that one, for example, than they would on a front-end loaded fund and so on. So, like, there's a lot of interest there by bankers and everybody to make a lot of money. And I wouldn't doubt that there's corruption within the CPP because they're in 7 countries where they have headquarters right now, and some of those countries are ridden with corruption, like London, Mumbai, and of course Sao Paulo in Brazil, which is just collapsing right now. So they invested a lot of money out there in the world, and the thing is, they said that they're well diversified. Well, they're like 80% of their 80% of all their investments are in either bonds or some type of security, whereas usually public stock markets, there's some private stock markets which I would prefer in front of public stock markets, because they're very volatile, and one stock could bring down like 10 stocks could bring down one good stock there. So it doesn't really matter when it comes to those. So it's a very high risk, and of course over 40, I believe it's 40.6% of the total fund is in other currencies, and so on. So there's a lot of currency risks for collapses there as well. So paper in general, Josh, is a very very risky asset when it comes to not holding the real thing.
That's one of the main points that we like to make here at WHAM. And of course, you also don't want to end up in a situation like those at Hollinger years ago under Conrad Black, which he went to jail for, the way he played with people's pensions. And of course...
Well, there's lots of these scams out in Norway as well. We had the Terra funds, which went like completely sour. They lost so much money because of the collateralized debt obligations they invested in. And RMs lost all their money that they saved away, that they took away from taxpayers.
Yeah, and we want to make it clear that these are our opinions, not advice, not legal advice, because legally we can't give advice because we didn't go to the Keynesian schools that we're supposed to in order to do that. But look up the facts for yourself, and you'll see that we're not fibbing here.
No, and also a warning. Like, look at right now in Detroit and other places that are collapsing. What is really hurting? It's public pension plans that are coming under scrutiny. And actually, in the U.S., they've been taking some money out of their social security plans and so on, and taking it to put it into other things. So there's a lot of things that are happening that is completely ridiculous, and they're just completely scrupulous bankers that are just doing whatever it takes to make money for themselves.
Certainly, and let's just quickly give some info on sound money and why it's so important to get gold, silver, platinum, things that cost money, as you kind of went into there, and put them under your mattress or put them in a private vault or something. A private vault many cities have. We're not talking about a bank where they can bail in and steal all your property, because it's the bank's property as long as it's there.
Please do not put your money in a bank.
No. But there's private vaults in many places. You have to look into the specific place that you live in. But then other than that, buy yourself a vault, bury it in the ground. Do what you can in order to preserve your money and preserve your wealth, because of course precious metals like silver and gold preserve wealth, and they're well on their way to a major boost in the market.
Oh, and what is happening right now, of course, it's very manipulated. So you won't see, like, people are thinking that it's going to go like on this like trajectory like this. It's going to go like this, guys. Like, it will just shoot up as the currency collapses.
And it's already hitting historic numbers and record amounts of time.
For sure. And what you got to also think about, the millionaires in the old days, they're the billionaires today. So think about that. We just added some zeros to it. Most of them. Anyways.
Yeah, adding zeros, just like when they print money.
Because they talk about, we got so many more millionaires today. Well,
yeah,
it's because we printed so much more money, guys.
Yeah, and it's worth less.
A lot to do with it.
Well, yeah, that money is worth a lot less than it was. Yeah, absolutely. Well, and then just going into that quickly, we have to consider the fact that like all paper money has historically reverted to its natural value of zero, always has, always will. Hundreds of currencies, we have to get out of that system. We have to free the markets, and we have to be a little bit more smart as individuals and be responsible for ourselves, and not allow ourselves to fall for the servitude of government and bow down to them and kneel to them and say, please give me this, please protect me in this way, please let me give you all my trust and all of my hopes and aspirations so that you can deal with it.
Government pensions money is collapsing in Europe too. I didn't mention Europe, of course. Like a lot of Southern European countries, their pension plans, those people are not going to see them, even though just in the coming 10-15 years they're not going to be there probably for a lot of these people. So think about that, guys, and take a second thought when you look at just thinking that CPP is going to be the way to go for your retirement.
Absolutely. It's so incredibly important. Well, thank you, John, for all this. We will go into this more in the future as things unfold, as they always do, because the monopoly keeps growing, right? The monopoly on government, the monopoly on the central bankers always grows. As long as we stay subservient to them, and we have to disobey, and we have to do what we can to avoid being thrown into the nanny state and being an entity, a pawn of this giant chess game for the queen and the king.
Yeah, and of course this is just our opinions, just to reinforce that, but this is what I truly believe by doing over 8 years of studying of markets and economics and different asset classes. I just look at common sense in the markets and what it tells me.
Yeah, it's so important to learn about the monetary system. Is probably one of the most important things to humanity for them to learn, because it's the most easy way for these governments and these central bankers to control us and coerce us, because we don't know much about it and we think that they're doing good for us when they're basically defrauding us.
100%.
Yeah. So thank you, John. This is Josh Sigurdson, John Sneisen signing out from World Alternative Media. Find the truth, be the change.